Hello everybody, my name is Victor and you're on the official CScalp channel, so I'm glad to welcome you here. This is the second lesson of our little course, and just for recalling, this free course is organized by the CScalp team. CScalp is a free trading terminal, mostly for scalping and intraday trading. During the previous lesson, we learned what is a trading plan and how to create it. Also, we discussed how to find entering points and looked at components which are forming these points. Finally, we looked at the character of moving the price on the cryptocurrency market and studied the main patterns. So, we've discussed the main formations of the technical analysis in the cryptocurrency market. So, if you haven't watched the first lesson, I really recommend you to do that just to understand, to get the full picture of the situation. Also, let's briefly repeat what we have to do before the course. So before the course, firstly, we have to sign up the Binance account, then to make a verification on it. So after that, you can make a deposit, and of course, watch the first lesson. So here's our little plan for today's lesson. So as I mentioned, first some things before the lesson. Then we're going to discuss what is a basic instrument, so the spot instrument and the futures instrument, what is it and how to analyze it. Then we're going to talk about order book structure of the spot and on the futures. So then we're going to types of market participants, uh, participants in order book, uh, talk a little bit about big volumes, so densities and robots, how to find them, how to use them in your trading plan. And finally, we're going to discuss how to work with participants in order book, the usage of limit, market, and stop orders. And finally, we're going to watch some videos with the examples of all the things that I've mentioned above. The free trading terminal CScalp is used in more than 50 countries all over the world. The legislation of every country to exchange trading is widely different. According to license agreement, while using CScalp, the trader is responsible for complying with legislation of his country. Respect the law. Thank you for attention. So, firstly, let's try to understand what tokens to trade and how to locate them in the CScalp. Because as you know, there are more and more new futures on the Binance because this exchange is listing them quite often. So as we're scalper traders, we are mostly interested in volatile instrument and how to find the most volatile instrument uh, for this moment of time. So you can use the CScalp bot. Also, we have this video on our channel. So there is the information how to download the CScalp, how to connect it to the Binance futures, how to connect it to the FTX futures, and also there we're gonna see the bot, so how it's working and how to understand what instruments are the most volatile at the moment. So as I said, firstly, let's talk a bit about instruments, the spot and the futures. So the basic token or the spot, so the basic instrument, is just an asset which is traded on the spot market, like the pair, for example, BTC USD or BTC USDT. So it's a standard spot instrument. The future is the derivative or a contract, so you're not buying the real token, you're buying its derivative. It's like an artificial instrument if you don't want to buy the original one. Also, on the futures, there is an opportunity to use leverage, which is the key of our trading style, let's say like that. So what is the main question is to what to analyze first because we have both mm, the spot and the futures. Mm, the answer is both, of course. This is also one of the key moments. because there are a lot of interesting situations, as in the spot order book, as in the futures. For example, like big volumes, robots, breakthroughs, different levels. So the levels are different on the spot instrument and on the future instrument. So as we quite limited in the number of order books in CScalp, we can just work only with futures. So trading only on futures. However, in point of analyzing, we have to to look at them both, as I previously said, because the levels are so they're nearly the same. However, one of the key factors exactly is that they are a little bit different, and you can make, for example, you can take the position. For example, you're opening the long order as uh, according to the spot levels as the futures one. So the key fact is that analyzing both futures and spot, however, you can trade as on the spot as on the futures. So when we are just trying to find the instruments, just sitting and analyzing, watching these order books, we can use just futures. However, if you're really intent to open the position, so you have to use both. So now let's talk a bit about liquidity. I prepared some pictures here. In the left screen, we have spot on the left side and the futures on the right side. So in the central picture is the same, spot is on the left, futures on the right, and in the right picture, the same, futures is on the right side, spot is on the left. So liquidity is an opportunity to turn an instrument into cash with the maximum speed. However, as we're scalper traders, for us, liquidity is the consistency or density of order book. With the help of it, we can easily open and close the position. So the more liquidity, the more opportunities fastly closing and open that position. So some instruments has the more active futures, uh, some has the more active spot. So let's look at the left picture. Here, spot is on the left side, and as you can see, there is more density on the spot, so the spread is really little. However, on the futures, the spread is like really, really wide, and there are not so many orders in order book. However, so on the spot, the spread is just 3 ticks, as you can see, yeah. So just 3 ticks, and there are a number of orders on almost on every tick of the market depth. So now we go into the central picture. Here you can see that the spot is has not so much liquidity, so the spread is like really wide, mm, and also the orders, between every order, there is just like, for example, 1 or 2 ticks difference. So this means that there is not so much liquidity. However, on the right side, on the futures, the spot is only just the future is only just 1 tick, 1 tick spread, and orders are almost everywhere. So, and on the right side, there is just like standard situation where the liquidity is equal as on the spot as in the futures. So the spread on the futures has just no ticks. On the spot is just 1 tick. So in orders allocated almost in every tick here. So liquidity is different on every instrument. When the opportunity for trading futures appeared on Binance, liquidity became move on them. So firstly, everyone is traded spot, and when the futures came, uh, they like became more interesting for traders, and the liquidity start coming to them. So the thing is that we can use leverage here, so you can allow yourself to open a bigger position with the leverage, and also can open short orders. So that's why futures became like more interesting for scalper traders. Often, futures is more liquid rather than spot, so it allows us to analyze only the futures order book when the price is not near important levels. So it's about what I've said above. When the price is not near the levels that we highlighted before, we can just look at the spot. However, analyzing while opening the position, both. So guys, here we coming to the structure of a market book on every instrument. First, I want to say that here are three main parts that you have to consider and analyze simultaneously. So here is the limit part, is on the right side. So here we can see the limit part. Then is going the transaction tape and clusters. So they display the volume which already been traded on the instrument. So let's talk a bit about every component, why it is important. Firstly, we're going to talk about the limit part. So limit part displays the queue for selling and queue for buying. So all these buys, for example, let's start with buys, are called bids, and this part, so they are located below the spread and has a green color. The second part is offers or asks, and it's above the spread and has a red color. So the participants who want to buy an instrument, they say bids. Those who intends to sell, they put orders. For example, you want to buy an instrument and put a long order in the bids part. So this is the limit order. And to buy the instrument, firstly, uh, you have to wait until all these orders will be realized. So all these volumes will be bought. And then the price is coming. For example, we want to buy here on this level of 1784. So we have to wait until everything here, every volume is here is bought, and then the price is coming to our level, buys what is already set here, and then our position also will be realized with all that volumes. So the main thing about the limit, and also the same thing is working with if you want to sell. So the main thing about the limit part of order book is that it don't move the price of an instrument. So the participants who put in orders here create this balance between the buying and selling volume. So what moving a price is the transaction tape. So the main thing is to understand that the price is moving not according the limit part. So here we can see just the disbalance between different volumes, densities, etc. However, what moving is the transaction tape. So transaction tape is located in the center of our working space. Here we can see all the traders that are made right in the moment. So all the trades that are bought or sold right here, right in this period of time, and exactly these trades are moving the price one direction or another. Buying orders are displayed with green color. Red color depicts selling trades. So when you're analyzing the situation, it's not enough looking only on volumes in the limit part of the order book. It's necessary to understand like who is stronger right now, buyer or a seller. And transaction tape can help you with that. So then we go into clusters. Clusters are located on the left side and they display the volume which has gone through the particular price and also the direction of the volume. For example, here we see that on the previous candle, on the price like 1887, there were like I mean not on this price, here on this price, uh, the volume. Now we can say that this is like one contract and 887. Uh, so there were sold this exactly this number of contracts because the cluster is depicted in red color. However, for example, here, exactly on this price, mm, there were bought two contracts and 63. So because it's depicted in green color. So clusters depicts us like what was before. So in this 5 minute candle, someone bought here, here, someone sold here, and the total volume was like this number. So finally, here, order book is the only instrument on the market which helps you to understand what is going on uh, with the instrument right in the moment. Other things like, I don't know, analyzing the graph, some indicators, volumes. So you only see the history here. So the scalpers have to understand what is happening right now. We have to analyze the transaction tape and the limit part of the order book. On the previous lesson, we talked about the trading plan. So the main moment is that order book and transaction tape shows us the power of participants and the direction of the price moving right now, right in the moment. For example, a particular level was formed because here, like the buyer sharply changed the price. I mean, in the transaction tape, suddenly there were the majority of green prints, so that means that the buyers are activated and starting to put their long orders, and the price changes direction. Or, for example, there was a big volume in the limit part, and the price just bounced from it. So it's very important for us to analyze the market book. And some final words about this part of the lesson. So as I said previously, as we are scalpers, we have to understand what is going on right here, right this moment, right this minute, this second, etc. So first we see on the disbalance between buyers and sellers in the order book, in the limit part of the order book. Then we see the transaction tape and understand who is in the majority now. For example, uh, the buyer are in the majority. Probably we'll have to understand in the limit part that we can open the position according to like this factor, and this factor. So we have to analyze them simultaneously, analyze them both to understand the situation now. Okay, so now let's talk about a bit about participants in order book. So globally, we can divide all participants into two groups: the limit participants and market participants. More locally, they're classified as real orders, so people, traders who are making these orders, and robots and algorithms. So first, let's talk a bit about real traders, so us, about people. The only thing in order book which is interesting, I mean, in the limit part of the order book, is big volumes, or in other words, densities. The examples are will be in the next slide. So these densities create disbalance and can make other participants to open orders, or in other words, to move the price. For example, closing positions in front of big volumes, or opening orders from these densities. So that's why big volume densities influence the price of an instrument, just not moving it, but influence. Uh, let's see one example. Uh, for example, we have a level which is formed before, and the price is going to it. Firstly, bouncing, then just making a little flat. And here, the first bounce was made because here is a really big density, big volume density, uh, which is not like very easy to eat it by buyers. That's why firstly we bounce from it. And as we are going to this density the second time, so all the traders who made their buys like here or here, so they wanted to break through it. They're saying that this density is quite big and they start closing their positions, and then some guys activates who are called front runners. Front runners, these are guys who seeing this density and mm, trying to activate or to trade according to this density. So they are, uh, let's say, like helping uh, differently. So, in simple words, the front runners, for example, if we have here a density, the front runners, these are guys who are shorting, who are open their shorting positions according to the density. And so um, before, for example, here, here, and here, they're trying to short according to the density, and the price is moving back. So this is a very good example how a density which is located in the limit part of the order book, for example, on this price, there is a density. So in transaction tape, according to that, we start seeing sellings, and so the direction of the price is changing. So as you can see, volume densities can be very helpful. And now I'm going to say some words like where densities are considered to be the most significant. Firstly, like let's see the situation on the where when the density is on the previously formed level. So here's the level. Here we can see the density, really big density. It's like nearly the same as the previous one. However, let's just repeat a bit. So uh, also here we have to watch, it was said in the previous lesson, so the price action, how the price is going. So the first variant, if we see like a really impulsive movement, so it's coming here, excuse me, like coming to the density. So, and in order book, it's located like here in the limit part of the order book. So people who bought the active before, so probably they like bought it here on the previous level, and they are already in profit, so they're trying to fix some profit because they see the density on this level, so they're starting to sell, and we can see in the transaction tape that a lot of selling, so a lot of fixations. And also, as I said, the front runners are coming, and the price is bouncing. So, so we analyzed the price movement, so the price action. So it was like really impulsive movement, and the big density on the level which is formed previously, and this is like really good factor to take a bounce from this density or from this level. So, and other situation, if we have the same level and here is the density, and we just So we just bounced the first time, the second time, and then we come into it. So this moment, we have to analyze the transaction tape, and we have to look in the limit part of the order book, like uh, like here in the example is the seller buyers. So are the buyers going to eat going to eat the density? So this is a very good factor, as I said in the previous lesson, when the price is somehow flatting before the important level. So here we see the flat, uh, the density, also in the order book. And here we have to understand the situation in the moment, who is more powerful, the buyer or the seller. So we look at the transaction tape, and for example, there are a lot of buys here. And here in the limit part of the order book, we see that this density is already eaten. And when a half or one third of this density is left, we're going to open the position to eat the density. And like very often the density is eaten and the price is going to break through. So this kind of a strategy of trading the breakthrough of the level. So here you can see how densities, big volume densities, can be helpful to make like really good profitable trades. So now some words about the transaction tape. Here we're interested in total amount of buying or selling orders volume on the particular level, as I said in the last example. So we analyze who is leading, the seller or a buyer. We're seeing the amount of their speed and size while the price is coming to important level, for example, like on a high or a low. So this is the skill of reading a transaction tape. There are three main factors which can help you to analyze the transaction tape. First is speed of the tape. The second, size and volume of prints. Third, the direction or the trend of a tape. So, for example, the amount of cells on the highs which you want to break through, or the amount of buys on the lows which you also want to break through or to take a bounce from it. So we can analyze and understand the power of participants, which help us to make a decision, uh, like is it better to trade a bounce from a level, or here is better try to breaking it through. So this is how it works. Then we going to robots or algorithms. Also here, like we can divide two components. Two types of robots. The first one is exchange robots. The second one is private robots or algorithms. Exchange robots, we're going to see the next slide. So there are a lot of different participants in private robot sector. So let's say a bit like uh, about that. So two main things to detect a robot are: the first one, carefully watch and analyze the order book of an instrument. So like a lot of practice will help you with that. The more time you spend on trading, on learning, studying the order books, the better in the future you'll see the robots. And the second thing is to know what are robots and how do they work. Here I'm going to help you with that. So robot is a clearly created algorithm which is going to do everything the same way. I mean, the same volume. For example, the robot is buying the same volume, the same price, the same interval, and on the same period of time. Also, it operates a way faster than human. For example, if you want to set the order on a particular price, so firstly, we're going to set it, and then while the price is moving, we have, if we want to replace it, we have to close the old order, then think about the new price of the new order, then we have to write down the new price, and only then the order will be placed. However, Robot is doing it in like milliseconds, like in other words, like teleporting. So, guys, here we looked at the participants in order book, the main types of them. So, a little bit strategies, a little words about strategies, how to trade like a breakthrough or a bounce according to the densities. And so now we're going to watch some examples of trades with volume densities. However, firstly, let's look at exchange algorithms because they're considered to be the easiest to find. Okay, here we see some examples of the market maker robots. So market makers are the participants who create an additional visibility and liquidity in a market book. It's needed for market depth not to be empty, and when some big participants realizing huge volumes in the market just to prevent squeezes. What you have to know about market maker who are not trading, so we are not trading with them and not opening any deals. So we're not using market makers in our trading strategies. They needed just to understand where is the market maker order and where is the volume of real participants, so or the person or the trader. There are two rules to understand that this is a market maker. The first one, the volume is the same in bid and ask. And the second one, market maker order is not static. So they're moving with the instrument price using using that two rules will help you to understand where is the real order and where is the market maker. So for example, look here on the first picture, we can see two equal orders, one in the bids and one in the asks. So both of them are 65k, and look at the thing, they're nearly on the same distance from the spread. So it means that here we have a market maker and we cannot just work with its densities, because sometimes you can just think that this is the real density of a real person, if you, of course, if you know what does it mean, the market maker. So now you know it, and now it will be quite easy to understand where is the market maker and where is the real density. So in the second picture, we can see that 1.5 million mm, in bid, in the bid part of the order book, so 1.5 million, and in the ask part, here is just market maker was put on other density, and here we have 2 millions. However, both of these orders are market maker orders. And finally, in the third picture, we can see that this like 16k, both of the orders, so they're also the market makers and on the same distance from the spread. Also, one thing about the market makers is just they're moving after the price. For example, if the price is for example, rising. So the higher market maker, which is located in the ask part, it will be replacing its order higher and higher and higher. However, the market maker, which is in the bid part, so like let's say a buying market maker, it also will rising this order. So to make the price in the same range. So this range will be moving moving and moving as the price will be rising or uh, going down. So now some words about correlators. So correlators are impossible to notice them in the order book. Rarely you can see them in transaction tape or in a spread or near the spread. So there are three things which robot correlators help us to do. The first one, uh, they're looking after the price, not allowing to deviate from normal points. So what is normal price? This is the last realized price in a spread, and sometimes it changes so fast. For example, when big market participants are realizing large volumes, like large volume densities with the market orders. This action is making a short through the order book. So this volume is eating all the limit orders, so its way and changes the price rapidly. So correlators are needed to return the price back to its normal level. So as I said, it's like unreal to see them in the order book. So now I want to show you the squeeze, which was in the dash. So it's the perpetual futures in the dash. So here we see like a really big squeeze up to zero price. It means that uh, correlators here work like really bad. Probably there was a problem with the system, and correlators like for sometimes were off. However, here as you can see, when the price came to zero level, they started rapidly buying the price. So and everything was like in a minute or probably even in some seconds. So let's try to find the squeeze in a more little time frame. So, so here you can see also one squeeze, which is the same. I mean, the same bad work of uh, correlators. Unfortunately, we cannot see because the Tradingview allows mm, only the limit number of candles. However, as we've seen, these squeezes are possible, and this means that the robot correlators doing are not doing good on this active. So, second type of such robots is needed to correlate the price between instruments. So, as you know, futures are repeating everything after the main instrument, after the spot instrument. So they're working between the main asset and the future to correlate their price. And the third type is the algorithm that is working between exchanges. So as you know, one token can be traded on different exchanges. So these robots are trying to prevent arbitrage. The arbitrage is the early tendency in cryptocurrency market, as all exchanges are considered to be decentralized, and as I said previously, one token can be traded, for example, on Binance and on FTX exchange. Mm, and there were some people who are trying to find this little difference between levels of between prices of, for example, like the Bitcoin instrument, yeah, on one exchange and another. So you're buying this token on one exchange and then selling in other exchange like for a bit bigger price. So these robots are trying to prevent this thing, and this was the third type of robot correlators. However, we're not like working with them and scalping. So the important thing you have to know is that robots are created to support normal trading on exchanges. So they help everything to work properly. And now we're going to see some examples of trades with densities. And finally, we're going to see some robots. So guys, here I selected two informative situations of working with big limit participants. So on the first video, I opened the trade on futures with the help of big volume density on the spot instrument. Secondly, there was a density directly on the futures instrument. So as I previously said about the disbalance, which appears because of big participants, here I tried to take a bounce from a density. So here is the big limit buying order in the center of the screen. So on the ADA spot instrument, it's like 4,600,052. So I put my long orders nearly at the same price as on the spot order book. Here we can see a little difference between spot and future prices. It's absolutely okay. So I taken it into account and use the difference while putting orders. The thing is that futures can squeeze a bit because there is no densities here, as you can see on the futures. However, on the spot, there is density, and the price simply mm, cannot like fall under it. So on the futures, this is possible. So be careful. So we coming to this volume on the spot, and my position are opening. So I'm opening the positions with two parts. It's like 50K lots in total. Mm. And also I want to say that if you want to try to take a bounce on the futures from a density on the spot, you have to count what price will be on the futures when the spot will come very close or straight to this volume. So I mean to consider that difference that I previously said about. However, if the density is on the futures, we just open the trade straight from it, and our stop loss will be placed right in this density. So it will be eaten, and we just automatically close our position. Uh, okay, here our orders are opening, and I'm just trying to make like a visible effect of buying by trading like four lots. And guys, also I want to say that if so, we talked about the stop loss on the if you trade on futures. However, if we trade um, according to the spot, like here in this situation, uh, we'll have to close our position by hand. So um, it's like when the density, when there is like one, like a half or one third of this density left on the spot, so it's being eaten like a half or one third, we automatically close our position by hands just with the market order. So um, so here, like it's very standard situation when we just counted the difference between this the spot and the futures. I mean the price. So took our placed our orders and just waiting. So the orders are realized, and we're waiting. I put some limit orders for closing the position because the risk in this, like the ratio of risk profit here is very, very short. I mean, it's vice versa. The stop is very short. It's like 100th or half hundredth of a percent. So the ratio of risk profit is like one to five or 1 to 6. So very good. As we see, as we seeing before, while coming to the density, there were no just like very strong cells. They just eaten something like ate something like 60K, and however, there were not so many active buys. But I just thought that they're gonna be like in the future. I mean, after the bounce. So here we're just waiting because the instrument was flatting, and I wasn't expecting some like really big, really long bounce, like very impulsive one. So we just accurately closing the positions. I'm still trying to make an effect of buying by realizing like very tiny volumes. So and as I said before, here the main thing is just to wait. So we already have the profit, as you can see, uh, and just waiting, just looking at the situation. So it's just like a standard bouncing trade with like a scalper trade because profit here is not so long. However, the ratio of risk profit is quite big, so it makes us more confident in this trade. So I decided finally to close my position um, because the movement was stopping, and I finally closed. So let's see the next. The next we have the XLM trade on the futures. Here with the density will be replacing, so this participant will be trying to realize his volume. So what do we have here? Uh, I'm seeing the really big volume density. It's like 9 millions, 9 10 million. So between this price. Uh, so and I decided why not to try to open the position from it. However, the density like disappeared and it was replaced replaced just under the spread. So this is a very good sign that this density want to be realized. So and as we can see here, it's like 2 millions will be realized just in the moment of replacing. So I open the position up. So I'm opening the position with the market order. Um and also I decided to firstly to put the limit some limit orders, just to rebounds, let's say like that. However, the density was disappearing and finally again it was replaced, not like a very close distance to the spread. However, so and here we can see that according to this density, the buyings are continuing. So we have quite strong movement, and I'm starting closing the position um, because the movement was already very good, as we can see here. So it's already 1.2%, 1.2%. So I was just trying to close like with a little volume, so partly, let's say like that. This is also one of the key factors to close your positions partly. And I just left here a little part, uh, yes, a little part of my position, and just waiting and waiting here. The movement is continuing. And here we also gonna see one interesting thing, mm, that there will be the new density, so which is very interesting because like two densities. So as we can see here, another density like 6 millions, which is very good. And I decided just to reopen the positions to add some volume straight from this density. Yeah, and Well, it's like it's not the standard situation. I mean, when two densities like in one time are replacing. However, here it was quite like a situation. So the density disappears. Probably they're going to replace it. Yes, and they are trying to replace this density. However, like straight from straight when the price was bouncing, the movement was quite nice. However, after that, there appeared like a lot of sells, as you can see already here. So there are some sellings, and we all like always retesting this density, which tells us that this density is real. So it's not a spoofer, it's not a like a robot. So we're just waiting. We already, as I said, have profit, so we have quite nice average price, which allows us to save, let's say like that, yeah, to save our position and just to wait. So the only thing, if you have a good average price, just to wait and to trade only according your trading plan that we discussed in the first lesson. So here we see that everything almost very good in the transaction tape. So um, we have a big density in the limit order part. So there are no problems. So we're just keeping our position and trying to maximize profit. Of course, if this density will disappear and so it won't be like replacing it. So of course, if the price like will go down and I counted my risks, so I have like mm, the very clear stop loss here. I mean, particularly here, the stop loss will be placed as the trade is on the futures from the futures density. The stop loss will be placed um right in this density. So guys, what I wanted to say. mm, so let's just skip some time because here I was just, oh, sorry, this is the robot. So as I said, guys, and then finally I'm just closing the position, something right here. So what I wanted to say is that big densities create a disbalance and force the participants to open or to close the positions in front of them. I mean, they like forcing it, they like forcing their participants to open and close the positions. You can use this both on futures and on spot order book, mm, and opening such trades better on the distance of like from 1 to 15 ticks from the density, and your stop loss has to be placed inside the big volume. So here we use limit and market orders. So as the stop loss, you can use also the limit or the stop order. I mean the stop, of course, because the stop loss certainly is the stop order. However, experienced traders, if you spend a lot of time on the market, they don't use automatic stop losses. They just change it with market orders, so they know exactly where the stop loss is, and they just click with the market order to sell all the position. So finally, we're going to watch two videos. First one is about eating a density. So this trade is about eating a density, and the second one is how to work with squeezer robot. Okay, guys, here first our situation. What we can see here, look at two order books in the right side of the screen. Here we can see the band, and I will try in this situation to eat, like to open the position on eating these densities, both, as we can see on the futures and on the spot. There are two densities. So on the spot is and on the futures, and we'll try to break them through. Unfortunately, I don't have a graph here, but the situation like is kind of standard. So we have an impulse, and then the price is flatting. Is flatting on the level, important level, which is like, let's say, defended by the density. So as we can see here in our example. Well, so let's go next. I'm just waiting. I'm waiting for the price to come to these densities, and we'll try to break them through. Here we can see the active buyer, and the spot is eating its density. And then when it is left like 5K on the futures, order book, I just open the position in the market, opening it, and just waiting for the movement continuation. So higher, you can see the important levels that are highlighted. So I highlighted them, and was firstly I thought that I'm gonna add my position here. uh, However, I didn't do that because it was not, like, let's say, confident about the movement. So I decided just to wait and not like sell the position, but not adding it. So probably just trying to make more profits with what I already have. So here we can see the active buyer, and notice that straight after the first impulse, it's already 1.5% profit. So now I decided to close the position with parts. This is like very important to close the position partly, like to maximize your profit. So, and here, like the only thing is just to wait, as I said before. So I just put my limit selling orders, and just waiting and waiting. And here I seeing that the movement is starting to slow down, and we see that we came on the spot to the density, and here I'll decide to close the position because not seeing any active buyer, and so you can see the density, and they're not like active buying before this density. So I decide to like finally close the last part of my volume, and just to end with that trade. Okay, guys, now we're going next, and gonna talk a little bit about robots. There are a lot of different robots on the market. I mean, in today's trading, there are different private algorithms that are used by different big funds and other institutional investors, for example. So like let's like take an example. For example, the simplest, the easiest robot is the robot buyer or a robot seller, which is buys or sells the same volume uh, with market orders with the same interval on the same period of time. For example, if you take a robot buyer, it buys, okay, let it be 250 lots during every second. So it's 250, 250, 250, 250, and again. So the same volume, 250, the same period of time. For example, uh, it's working like a minute, then it's turning off, then like a minute later, it starts again. So in the same interval, so every second it buys 250 lots. The same thing is working with the robot seller, so it sells like 100 or 250 lots. It depends on the robot. And the thing is that There are like tiny robots, like little robots that are not influencing the market. So even if if you see them, you can not just simply use them in your trading. However, there can be like not like a big robots, but for example, buyers or sellers which influence the market, and you can use them in your trading. Here we have a more interesting situation. So here we have the squeezer. The squeezer works like that if it works in short. So if it works in short, like here, it's placing, it's replacing the density and is holding first place in a spread on the first offer. If it works in longs, it holds like it's holding on the first place uh, in the bids. So, okay, as we can see here on the price 1.60 1.6638, we have a density, so which is located exactly on this price, and then it's like changed. It was replaced uh, on like the selling order. Then they appeared the selling order on the price 1.6630. And here we can see, so when the new sellings comes, so we can see the density, right? 16630. When the new order appeared in the spread, the robot just catches it and changed and replacing its density uh, on this first offer. And I'm opening the position because I noticed the robot. So I'm making orders right in the spread, and robots is catching me. So it's like teleporting to my orders because they are the first in the spread. And it's almost like it's working so fast that it's almost impossible to see this robot in the order book. However, it is there, and this is the example of how to trade it. So you can see that it's catching every new order, and there is a moment. So I started closing the position, and there are no more new selling orders. So and buyers are starting to eat this robot. So and then they just when they ate like a half from this robot density, I just closed my position because there is no sense to continue standing here because the robot is almost eaten. So this was example with the robots with the squeezer robot. So guys, let's make a little conclusion what we've learned here in this lesson, and we'll be finishing. So guys, in conclusion, we've watched what is the basic asset and what is the futures, what to analyze, like what to analyze if we're not coming to important levels, etc., etc. Then how to choose an order book, which we're going to analyze, looked on the main components of the market depth. Remember, three main foundations, three main components: the limit part, where we are working with limit participants with big volumes. Also the transaction tape, which help us to understand the power of buyer or seller right now in the moment. And of course, the clusters. So also we looked at the components of market depth, learned very important topic about participants in the order book, understood, as I already said, how to work with big volumes and how to use them in your trading plan, in your trading. Also looked at robots and how to use them. And finally, we watched some trades where were used all the topics that we've discussed before. So guys, it was the second lesson of our free CScalp course. I wish you a lot of profits, a lot of practice, and a lot of interesting trades. Bye. Do you use CScalp and fluently speaking foreign languages? Great.
You have an opportunity to help CScalp and earn some money on it. CScalp is used by traders in 50 countries all over the world, and they're in sore need of educational videos in different languages. Are you ready to create videos in foreign language for the CScalp official channel? Great. Do you have your own channel in foreign language and ready to place videos about CScalp there? Even better. Write our support and we'll tell you more about the cooperation. Thank you for being with us.